Hello, today is Sunday, May 22nd, 2022. Doing a quick report. The weekend report title is Did the stock market just bottom in the short term? And this is your market report. Hi, this is Jonathan Gurney, Portfolio Manager of Gurney Financial. Disclosure statement, this post is for informational use only. The views expressed are those of the author Jonathan Gurney, that's me. The material is not intended to be relied upon as a forecast, research, or investment advice and is not a recommendation, offer, or solicitation to buy or sell any securities or to adapt or adopt any investment strategy. This is basically just to keep clients aware of what we are doing, what the game plan is, and what I'm seeing. So let's hit the charts. Okay, so looking at the performance, you can see that it's still pretty ugly. This is the end of day. We had a nice rally toward the end of the day, but if I'm showing you the week, it's still pretty brutal out there. Okay, so not a great week, but we did see some good signs, and we'll get to those. But I want to just kind of go over performance, what I'm seeing so far. So 1 week, the year to date is not pretty. Again, the goal that we're trying to implement and the strategy that we're trying to kind of keep in mind is we're basically trading the S&P 500, getting in and out. We're beating it by almost 8% since we've started. And generally on the downside, we usually do beat the index by about half or prevent dips into about half. So we're down about 18% year to date. We're down about 8%. So literally 40 minutes before the market closed, we were up 10%, beating the market by 10%, not up 10%, but beating the market, the benchmark by 10%. That's how much it moved in the last 40 minutes. It's just the way it works. It was options expiration. We'll get into those details. So there's still a lot of work to be done. There are some good signs that we could be seeing a turnaround here. It does take time, so I don't want to be pressing hard at all here. Sectors, the 1 week. What was interesting here is a lot of the sectors that have been holding up well, the defensive areas like the staples, finally rolled over. I like to call this period that we're in kind of a rolling bear market. I'm not the one that coined that by any means, but it's interesting because it seems like each week a new sector is just getting absolutely obliterated. And so when you see the defensive names finally get hit, you wonder if this could be a bottom. We're starting to see some of the new lows go a little bit, improve essentially. So new lows are improving. That's good to see. So there are some good signs here. Our performance for the week, show this to you here. Again, since we started in September, this strategy, the S&P 500 is down 16. We're down about 8. So we're beating the benchmark by nearly 8. It's not perfect, which I had done better at times. But the reason why we try to beat the S&P 500 is it's one of the most efficient indexes. It's hard to beat. The index has averaged, I believe, about 10.5% excluding dividends since 1956. So if we can continue to beat the index, it will lead to good things. It's just there's not a lot of buyers currently. Hopefully that can change this week. So want to go to the charts now. Let's see what we can do. 1 second. My fire alarm's going off. My wife must be cooking. Good timing for that. Okay. That threw me off guard a little bit. All right, so here we go. I'm gonna shift the charts. There we go. So the 3-minute timer, here we go. Some of the good signs that we're seeing, we're beginning to see a decent amount of fear. The VIX, as you can see, is getting into levels that I like to see. We're in the 30 to 35 range. I wish it was a little bit higher, but you can see, could this be a resistance level that we keep going down from here potentially? For one reason or another, institutions like to see the 20% plunge intraday go below 20% and go higher then. That actually did happen. It's very, very interesting. It doesn't mean it's a bottom, but it's something that we're going to keep an eye on, undoubtedly. So again, it went down about 21%. Again, this is from the peak, not year to date. The peak in 2022 was down about 21.1%, and we bounced right at the 38.2, the 38.12. We went a little bit lower than that, but the 38.15 is one area that I was watching to see if we would bounce. So that's good to see. The Fibonacci indicator, as we discussed, the 38.2. So these are all good signs that I'm going over. We are near midterm oversold levels. Going back to here, near 30 is oversold. We've touched that before. The S&P 500 has had 7 negative returns and negative return weeks in a row. I'm not sure if the S&P 500 has actually gone 8 in a row ever. So that's kind of a moot point, but the Dow has been down 8 weeks in a row and has never seen down 9 in a row. Kind of interesting. Again, some of these negatives are actually positive from a contrarian standpoint. So we're seeing active managers only have 19.51% invested, as shown right here. That's very, very low. So we're seeing some fear. The put call ratio is right around 80. Yes, right here, the put call ratio, 80. So we're seeing some good fear. We're getting close. I'm not sure if we've seen the flush yet. I was hoping we would get the flush sell off Friday, which we did, but options expiration, weird things happen. It's not good risk reward to really be pressing either way there. Some other things that I'm watching. Many of the rotations out of the safe haven names. So that's what we were showing you, the staples. We're starting to see the fear really show when you get out of the defensive names, which is good. But at the same time, there's still some sectors hanging in there, and I wonder if we still need another dip. So the evidence is still inconclusive, in my opinion. No reason to press, but we are starting to see some good signs. The DeMark and Elliott wave structure, we won't go over what those mean exactly, but we're showing some signs of exhaustion short term. So I think it's important to be non-biased always, but it's even more important right now. The key levels that I'm watching on the S&P 500 is 39.25. Can we get above 39.25? We failed Friday. We want to get above the 5-day moving average quickly. And if we don't hold 48.50, it will not lead to good things. Okay, so have to be non-biased. We're kind of in the middle of nowhere right now. I wish this candle right here that you're seeing was green, meaning we did close amazingly positive 0.01% in the S&P 500 on Friday. As you can see, 0.01. However, it's still a red candle. Rarely do you see a turnaround on a red candle. Usually the turnarounds happen on a big flush and then you try to trickle higher. So there's some inconclusive evidence in my opinion, but there are some potentially good things showing in the charts. So again, it was difficult to decipher whether the 80-point move in 40 minutes on Friday's close was short covering, buying related, or simply tied to the traditional weird volatility that you see with options expiration. Probably the best definition is the rolling bear market that we discussed, but it was good to see the staples get smashed. The only sectors that really haven't seen new lows are materials, utilities, healthcare, and energy. A lot of times those are the defensive areas. So do we need to see a flush there? I don't know. This would be a good area and logical area to bounce, but we have to be non-biased. At this point, there's not enough evidence to press hard here. Retail earnings were horrible, but could that now be priced in since some of those names got absolutely killed last week? The big thing that's keeping me out right now is we're below all moving averages. We have a declining 200-day moving average, declining 50-day moving average, 20, 10, and 5. The 5-day moving average is short-term trend. And so we're below the 5-day moving average, period. So that trend alone, if you just stayed out below the 5-day moving average, that is short-term trend. So the midterm trend is down, 200-day moving average is sloping down, 50-day moving down, and all short-term movements down. So as you can see, the evidence still shows downward movement, but that could very well change short-term. And I'm definitely very open to getting above 39.25. 39.25 is right around here. And if we do, I think it could lead to good things. Really the big one, which would not surprise me to test early potentially this week, is the 39.43, which is the 5-day moving average. Okay. So that would be a really good first step to get above 49.43. That could get us pretty easily to 40.35 on nothing, just because everything is running on technicals. Let's be real about that. There's not really fundamentals aren't great right now, but everything is running on technicals, and you have a technical bear market. Once we're down 20% year to date, we got out of that, which is good. So it's funny how the news right away, when we went below 20% from the peak, I got calls immediately. So it's very clear that the news is still impacting, and there is definitely fear. I've been in cash for the last 3 days and got out as soon as possible on Wednesday. Wednesday was an awful day, and I'll show that to you real quick. The hard part about Wednesday was that we gapped down 2%. So it's like, are we going to hold this, or are we going to keep going lower? So I was pressing hard here. I had 150% invested because at this time, the evidence looked very, very good. We're above the 5-day. And we gapped down so hard and just kept tumbling lower. And at 39.60, which that was my get out, wait for better things. So that saved us capital. I don't like a negative week, but I did the best I could given the circumstances. We did lose 40.25 that day, but it happened overnight. So it was a tough decision of when to sell, if I'm being real. So a couple more things. This kind of shows relative, seeing some of the divergences that we're seeing. We're seeing the market go down overall, but new absolute lows over the last couple weeks beyond staples are starting to improve. So that's very interesting and definitely a positive. So as we discussed, the staples is a defensive area and finally got hit. So is this a bottom? Still inconclusive at this point, but there is a lot of evidence that could point to a nice move, even in the short term. Even if midterm we go lower, the market just doesn't. I wish the market would tank like it did in 2020, where it just flushed 38%, happened in a month, get it over with, let's move on. But this is different price action. This is a slow burn, makes you think we're going to get out, goes up for 3 days and gets spanked. So that's really all I want to go over. I don't think we really need to go over anything else. The 10 big boys, this just kind of shows how bad it was. A defensive name was the only positive. A healthcare name was the only positive stock this week. But if we're going year to date, you can see how bad it actually is. And we discussed this last year. Once the big boys finally give up, it's going to lead to bad things. And we're starting to see some of the momentum names, the growth names that were just obliterated the last year and a half, starting to improve, not hitting new lows, and these names hitting new lows, trying to recover. So that could also pose as a bottom. We'll see, but not enough evidence to really press hard here, but just wanted to keep you aware of what I'm seeing. The game plan from here, pretty simple. If we hold 38.50, that's a good thing. If we go above 39.25, this thing can move pretty quick. So that's what I'm watching. There are good signs. Our reasons to still be patient at this point. So overall, I think going into each day being non-biased, and I feel like I'm in a good position right now mentally for that. I see the good, I see the bad, not enough evidence quite yet, but that could change quick. Like currently on Sunday on 9:15, you're seeing the momentum areas really move still. The Bitcoin areas really get moving. So we'll see what happens. And just for disclosure, like clients, we don't have any Bitcoin or crypto, but it's good to see some of the beaten down areas starting to improve, bottom, kind of make a base potentially before the rest of the market gets going. Hopefully this flush this week was the end, but if it's not, we are positioned accordingly for that. So need a lot more confirmation from buyers, and I'm not going to rely on a potential options expiration Friday to change the weight of the evidence. I just don't have enough evidence yet, but there are a lot of good signs that we potentially could bottom here. So being non-biased, have a great weekend. I don't know about you, but in Ohio, we've had a lot of storms recently. I know in Colorado, where some family lives, they've had some bizarre 9 inches of snow. They need water badly, so that could be a good thing. We'll see. But hang in there. Love y'all. Talk to you soon.